Where are we in the market cycle right now? What's happening with AI? And what does what's happening with AI right now tell us about the future of the cryptocurrency market? I know you're probably tired of hearing already. AI bubble's here, baby. It's already over. It's time to think again. We're not early to the AI bubble or the crypto bubble, but the signs are that we're not late either. In fact, we're kind of mid-cycle of the AI bubble. And as for crypto, everything suggests that it's syncing up with the whole risk-on AI narrative, and that's especially the case for AI-focused crypto projects. But for crypto more broadly, the AI crypto bubble, basically the same risk-on vibes, okay? Basically, we need the AI and crypto sectors to each keep performing. Right now, all the tailwinds are saying that AI and crypto will keep performing. If AI does well, that creates risk-on attitudes that crypto will do well. And what we're seeing right now is legacy markets climbing. AI at the tip of the spear. Crypto opening the gates to enormous institutional inflows. Both these things are happening in parallel to each other, and there's even some crossovers. So today, let's break down why the markets have still got fuel left in the tank, and the first critical factor is that legacy markets are looking effing good. That means the situation is not euphoric right now. It's sustainable, and yes, I know what you're gonna think, but aren't markets super overvalued right now? You see all the scary charts, I understand. Have a look at this chart here posted by Jurian Timmer over at Fidelity. He makes the point that on the S&P 500 equal weighted index, it's positioned right there on its rising trend line. Well, 2/3 of its components are right now above their 200-day moving average, which is a signal of internal strength. Remember the 200-day moving average? Below it kind of sucks. Everything above it's kind of good. Yeah, we're above it. That's good. Added to that, the forward PE is just 18.3x. Just slightly above the long-term average of 17x. As Jurian puts it, this doesn't look like a market that's over its skis. We're not overheated, and it doesn't scream bubble. It suggests mid-cycle. And that matters for crypto because when trad markets are healthy, it creates space for risk-on assets like crypto to expand without fear of imminent collapse. And so the next point is that if you want to make historical comparisons, then actually, the dot-com bubble is a great comparison to make, but it's not 2000, it's 1997, and the best years are still ahead of us. Extrapolating from an interview given by investing legend Howard Marks, who has zoomed out and says the current situation feels like 1997, which means, in his words, that U.S. stocks are in the early days of a bubble. The bubble's come, the bubble will pop, yeah, sure. Ride the expansion of the bubble, baby, make shit tons of money. He is not ringing the alarm bells yet, although he has acknowledged that things are getting expensive in some areas. In other words, again, mid-cycle with further gains to come before any kind of major horrific correction. Just to recap on the history, back in the late 90s, the dot-com bubble, the tech rally was heating up big time, and everybody kept calling it to be over and the top to be in every 5 minutes probably back then. I mean, imagine if we had social media back then, it would have been insufferable. But in fact, it still had years to run. And that was with interest rates over 4% the entire time, just for a matter of fact. So there was time to capitalize on the exuberance as the market didn't peak until, well, late 99, early 2000. After which, of course, total collapse, multi-year bear market was pretty horrific. So again, this relates back to crypto now. The traditional market cycle has time left, and the tech AI crypto bubble is still expanding. Crypto's going to go higher. We've got further data suggesting that actually we're not, or at least not yet, in the bubble popping territory. Rather, we're in a generational gold rush, and you better be effing paying attention. By the way, if you're participating in the gold rush, you need a good place to play the game, to trade, okay? That place is BitUnix. No KYC, no BS, no VPN exchange, be able to anyone, anywhere. That's you. You can long the rips, short the dips. Deep liquidity and all the big pairs, they got you covered, okay? There's a link down below. Go check it out for exclusive deposit bonuses, exclusive sign-up bonuses. You'll love it. I'm trading over there all the time. You can join me. Go check it out. Link down below. Now check out this chart here posted by Alex Kruger that shows the difference between tech in 2000 and tech in 2025. It's a story of earnings. A lot of people are yelling that AI is the next .com, that the S&P 500 price to book ratio is above .com levels, that the Buffett indicator is at new highs, but they don't acknowledge that earnings are surging. And unlike in 2000, when sky-high valuations were purely narrative-driven with no earnings support, guess what? Today's growth stocks have incredibly strong fundamentals by comparison. Not every single one of them, but as a broad stroke statement, yes. Therefore, that validates the expensive prices. So this market is comparatively, and kind of crazy as it may sound considering recent gains, much more grounded than back in 2000. And Alex Kruger also points out how much Donald Trump's presidential antics have also affected the market. saying it wasn't market froth that brought dips earlier in the year. It was tariff drama. But right now, Trump is actively moving to run the economy hot, while Jerome Powell signaled dovishness at Jackson Hole last week. Good things are afoot. And finally, let's pick up on one more relevant take here. This time from Morgan Stanley CIO Mike Wilson, who thinks the next bull run just began. According to this analysis, the April stock sell-off was the final capitulation of what was essentially a bear market that began the previous summer. And since that capitulation price action has now been characterized by basically shallow pullbacks and higher highs, which is basically bull market behavior. And he therefore suggests that there won't be deep pullbacks offering easy entries for investors. Wilson also notes that retail never stopped buying and that we are now about 4 months in to a new bull run. Well, these bull phases typically last 1 to 2 years or more. Interestingly, when he talks about what to own, guess what? He highlights that the market is broadening out beyond just the Magnificent Seven, the big tech stocks, NVIDIA and Google and stuff. And so yes, again, sounding bullish for crypto. So put all the pieces together. The stock market, it is not overheated. If a bubble is forming, then it's got a lot more inflating to go before it pops. Valuations right now, based on fundamentals, not just narratives, are not that crazy. We're looking at a generational gold rush in AI. And as more money gets made in AI, there's gonna be more spillover into the rest of the stock market and into crypto. The next bull phase for stocks began earlier this year, and it's got probably a few years to go. Institutional flows are entering into the crypto space, ETFs, digital asset treasuries, mainstream vehicles for speculation, pro-crypto policy, everything's lining up with, again, macro tailwinds in the stock markets looking really good. The Fed's shifting, Trump wants to run it hot, he wants a weak dollar, he wants low rates, everything that's the perfect cocktail for things to pump. You can see the positives are lining up, so it makes sense to get exposure to crypto and to AI. I have exposure to both. Shit tons of crypto, lots of stocks, even the occasional crypto AI coin. Now look, crypto AI coins specifically, there's great stuff out there like Virtuals and BitTensor, sure, fine. But more broadly, this is a thesis that everything is gonna go way higher. Okay, the key point is that the market structure right now is bullish. Short term, there's always corrections, there's always sell-offs, there's always leverage flushes, all that kind of bullshit. But if all these analysts are right, AI stocks are going to make a fortune in the next few years, and we're going to see crypto make fortunes in the next few years. You don't have to have AI-specific cryptos, even though there's some good ones out there, fine. But just betting on some of the big names in crypto, they're probably all going to go a lot higher. Thanks for watching.